What's up, everybody? Nate here. So Goldman Sachs is betting big on Bitcoin. No, literally. They recently just completed a milestone trade with Galaxy Digital involving a crypto derivatives contract, in which Goldman Sachs called, quote, an important development in our digital asset capabilities and for the broader evolution of the asset class. And this sort of thing is a big deal if it continues to become the norm in the United States. It could mean that a lot more people have access to Bitcoin and cryptocurrency without actually investing in it, and that the entire asset market in general becomes even more institutionalized. And while that has its benefits, there are definitely a ton of negatives when it comes to institutional investing. But what does Goldman Sachs and other major US banks entering the cryptocurrency space actually mean for the market in general? Well, today we're gonna break all of this down and go over the future of the cryptocurrency market in terms of these new crypto derivative contracts. And we're gonna go over what this could possibly mean for the price of cryptocurrencies like Bitcoin and Ethereum in 2022 and beyond. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about Goldman Sachs and Bitcoin. Wait a second, those two things don't go together. Well, if the thought of a major US bank like Goldman Sachs entering the cryptocurrency market gives you chills, then you are definitely not alone. Banks and other financial institutions around the world have started to dip their toes further and further into the cryptocurrency space over the last few years. In 2021, ProShares actually launched the world's first Bitcoin ETF. This allowed investors to invest in a fund that bet on the future price of Bitcoin. So you essentially bought a share of this fund, not actual Bitcoin. That was one of the very first ETFs surrounding Bitcoin, and there has been several others that have tried, but they've all been based on what the price of Bitcoin is today. That's essentially how all of the other ETFs for stocks, bonds, and commodities work in the United States. You essentially buy a share of this fund and you're directly investing in a group of different assets. And what your share is worth is based on the value of all of those assets in the fund right now. But the SEC hasn't really been too keen on this because cryptocurrencies are extremely volatile. So investing in them right now could mean massive price fluctuations and value fluctuations in that fund. So instead, they allow you to bet on the future of what cryptocurrency is going to be, particularly Bitcoin. So how exactly is that different than what Goldman Sachs is doing right now? Well, Goldman Sachs is seeking to go even further with Bitcoin and cryptocurrency derivative contracts. These are things like options and futures in the cryptocurrency market. And they basically allow you to invest in a synthetic version of Bitcoin and not actually the asset itself. So investors are still getting a lot of exposure to the cryptocurrency market without actually buying any cryptocurrency. Here is what the co-president of Galaxy Digital, Damien Vanderwilt, had to say about its recent deal with Goldman Sachs. This trade represents the first step that banks have taken to offer direct customizable exposures to the crypto market on behalf of their clients. The option trades are much more systematically relevant to markets compared to cleared future or other exchange-based products. At a high level, that's because of the implications of the risks banks are taking on. They're implying their trust in crypto's maturity today. Okay, so let's kind of break down what he's talking about there. And let's start with the first part. Systematically relevant compared to future contracts and ETFs. A future contract is an agreement between a buyer and seller that basically bets on what the future price of an asset is going to be. What Goldman Sachs is more interested in is the options trading. So it's kind of similar to a futures contract where there's still a buyer and a seller entering a contract, but at the end of the contract, there's going to be some type of exchange. So you can either buy that asset or sell it, and sometimes you don't have to do either. With the Bitcoin futures ETF, you're essentially just buying a share into that ETF, and then if the price actually goes up or down, that's going to be what the value of your shares are worth. With options though, you're actually kind of influencing the market because if people bet on Bitcoin or other cryptocurrencies big, or they're actually saying that cryptocurrencies are going to go down in value, well, that kind of influences what the price of that asset is going to be. It gives investors a lot more information and confidence on the asset that they actually own, which in this case would be Bitcoin, Ethereum, or other cryptos. The second part, they're implying their trust behind crypto. So with a big bank like Goldman Sachs, they're owning a lot of these contracts. So when you go into a deal with Goldman Sachs, who is managing this crypto's contract, they're also fronting all of the money for that exchange. That means the liquidity for all of these US banks in regards to cryptocurrency is huge. And of course, you have the security and safety of a major US bank like Goldman Sachs. Now, in my opinion, here's kind of the pros and cons of Goldman Sachs entering the cryptocurrency space in this way. On the pro side, you have a major US bank offering new investment opportunities to all of its customers. That could mean that cryptos like Bitcoin and Ethereum become a lot more legitimized in our society, especially if more banks start to enter the space as well. This could also end up being kind of the next evolution of Bitcoin and cryptocurrency as we know it. Options and future contracts are nothing new to the business and financial world. They've been around a long time with stocks, bonds, and commodities. They allow investors to know the real price and value of an asset because realistically, the price of an asset is really only what somebody is willing to pay for it. However, when you kind of add all of these contracts and futures in the mix, well, now you can see the greater market as a whole. If ETF futures are up, well, then you can expect all of those assets in a particular ETF to also go up. But if a lot of these futures are down, then that shows that the market in general is either worried about something or they could start pulling their money in the future. That's going to influence the actual investors who own these assets. And the same thing could happen in the cryptocurrency space. That means you're no longer just betting on whether the price is going to go up or down. You're actually looking at a ton more information in the market. It also means a much more clear way for people to get exposure to Bitcoin and other cryptocurrencies and spend based on that investment. You see, right now, if you buy a piece of Bitcoin, it's kind of difficult to spend your Bitcoin. I mean, you have to go to a place that actually accepts Bitcoin, and on top of that, you're hoping that by the time you leave that store, your Bitcoin is still worth what you bought it at. Because Bitcoin and other cryptos are so volatile, you don't really know what the price is going to be from one moment to the next. That can make it really hard to spend. However, with these options and future contracts and crypto derivatives, that kind of eliminates that issue altogether. Because now you're not actually trading and buying Bitcoin, you're trading and buying with US dollars. You're just basically looking at the price of Bitcoin in order to influence if it's going to be a positive investment or a negative one. And once that contract ends, there needs to be some kind of transaction so you can actually invest in one of these options, get cash, and then spend your money however you want to. All because Bitcoin simply exists. But hold on there. Goldman Sachs entering the Bitcoin and cryptocurrency space in this way also has a ton of cons. For one, you're investing with a financial institution, which means the financial institution, like Goldman Sachs, completely owns that contract. It could make changes to the contract or basically say that your contract is worth less than it actually is, simply because they own it. They could also bar you from accessing funds. And of course, if you have a contract with that particular bank and for whatever reason it goes under, well, then all of the money that you have sank into that contract is also going away. Not only that, but for a lot of cryptocurrency investors, Goldman Sachs entering the market completely undermines the fundamental values of cryptocurrency. Cryptocurrency is built by the people for the people. And a big financial institution like Goldman Sachs means that there's going to be a lot of institutional power. Power comes with influence. And if they have a massive influence over the market, well, then that investment no longer becomes for the people. And of course, this kind of eliminates the anonymous nature of cryptocurrency in general. I mean, transactions and money made is all supposed to be recorded on the blockchain, but when you invest in options, you're not actually investing in Bitcoin or cryptos, so there's no blockchain measures that need to be taken. Now, all of that is being tracked by Goldman Sachs. So with all of that being said, what exactly is this going to mean for the cryptocurrency market in general? So with all that being said, what what exactly is this going to mean for the cryptocurrency market in 2022 and beyond? Well, I will say Goldman Sachs still has a lot of SEC hurdles that it needs to get through before it can start offering its customers full-blown options contracts. However, if it does cross over and is able to start doing this on a wide scale, well, now you're going to have millions, if not billions, of additional dollars pouring into the Bitcoin market. That is all additional money that investors can then use to actually buy Bitcoin or buy other assets, which means you could start to see the assets in the cryptocurrency market rise in price sometime soon. That could lead to a lot more adoptability. So investors that actually own Bitcoin and other cryptos could start to be able to spend them and use them like a legitimate currency. More and more businesses are going to want to start offering crypto options for payment if a lot of people have Bitcoin. And that could ultimately lead to the price of Bitcoin and cryptocurrencies leveling out, so it won't become so volatile. It'll start acting like other currencies around the world, and its value will largely remain the same. It could also lead to a lot more institutional influence and power in the cryptocurrency market. So Goldman Sachs is one of the first big banks to do something like this, but if other banks start to follow suit, well, then they're gonna start pouring hundreds of billions of dollars of their own money into the market. And as long as they exist, that money is going to be tied up with them in one way or another. That could mean that the cryptocurrency market is always tied to those big US banks because so many investors are trading options with those financial institutions. Meaning we could end up seeing cryptocurrency become basically just like every other asset. And for some people, that is a good thing because it's more legitimate and it's a lot safer for people to buy and sell it. That also means that regulation is coming either from the SEC or the United States federal government. Regulation could potentially kill the technical power of Bitcoin and other cryptos. Cryptocurrency needs to be able to be free in order to grow. I mean, that's why it's grown so fast up to this point. Because it's open source and anybody is able to help develop the software of these cryptos, that has led to massive innovation. And now there are so many different things that you can do with cryptocurrency. It's not just an asset. It's not just a currency. It's not just a commodity. It is literally a technology. These banks and financial institutions might end all of that, and they might just consider it an asset class that you make money with. I mean, think of stocks. There's not really much going on with a stock other than that you own a partial piece of a company. That's pretty much it. And in a way, that could fundamentally change how we all view and interact with cryptocurrencies in the future. So in the future, you might not actually have to own Bitcoin or other cryptocurrencies in order to start making money off of that asset. Is that such a good idea? I want to hear from you on this issue. What do you think about Goldman Sachs entering the cryptocurrency market and potentially starting to offer its customers derivative crypto contracts? Do you think this is ultimately going to lead to a positive evolution of the cryptocurrency space? Or do you think that Goldman Sachs and other financial institutions offering these type of contracts is a terrible idea and will eventually tank and change the cryptocurrency market? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates on this channel 7 days a week. And I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.